All right, good morning, ladies and gentlemen. Today is August 18th, 2021, and I'm back with another live show. However, I noticed this morning when I pasted the live show page, when I embedded the live show page into the website, something has changed. It says this video is unavailable. So anyway, I'm doing the live show at my normal time. However, I will have to post the replay on the show page, and I did put a little note on there. So apparently YouTube has changed something regarding the embed code of the live show for whatever reason. So I'm gonna have to do some investigation on that. Last week I had some things I was doing. I was kind of taking a little vacation, sort of the dog days of summer, and then I come back today all prepared to get back into things, and I noticed that the embed code for the live show doesn't actually embed the live show on the page all of a sudden. So I'm going to have to look into that. Hopefully, I'll have it set up for next week. Worst comes to worst, I'll do what I'm doing today, which is basically doing the live show and then just after I'm done, which is going to be a quick one too, because I have some things to take care of, and we only have a couple open trades, and due to market conditions, there's really no pending trades. So we're kind of in the middle of dog days of summer here, and it's to be expected. And plus, the market itself is acting a little sketchy recently, which I'm sure you've noticed. Indexes seem to be holding up pretty well. I mean, the S&P is still right up against the highs, but as you're probably well aware, under the surface, there's a lot of damage. There's a lot of stocks that are getting hit and going down, nowhere near the highs, right? So it's kind of amazing. But we've talked about this before in the past, how the main handful of large cap stocks are basically holding up the indexes, and under the surface, there's a lot of not so great price action, right? So I mean, it kind of feels like we're in correction mode here. And I look at the chart of the S&P and the Nasdaq, and you wouldn't know it by in the Dow, you wouldn't know it by looking at the indexes. But if the majority of stocks, I would say, is not acting nearly as well as all the indexes. So you can see the SPY there. It's sold off a little bit, recovered. The Qs, interestingly enough, are just sort of they're just sort of meandering around here in a range, right up near the highs, obviously, but we've got just sort of a sideways range for the past few weeks here. This was a between mid-May and the beginning of July. Well, actually, about mid-July. From mid-May to mid-July, we were trending, had a little dip, and then now there's not really any trend in place. I would say that it's more of a sideways sort of consolidation. Obviously, on the Qs here, the price to beat is 370, right? And that's entirely possible, but we'll just have to see. The thing that kind of concerns me a little bit is the Russell 2000, right? Russell 2000, and by the way, that's the 200-day moving average. I got the 50 and the 200-day on these charts, so you can see that the Russell has sort of been pinched between the two, and is quite honestly seems to be, approaching the lower point of the range. So um, obviously, the Russell 2000 is, as I've said for many many years on this show, which we've done at various times. I remember we used to do this show, 6 8 years ago. We used to do this show like on Wednesday nights or something like that. I don't know, but anyway, and I've always said that the Russell 2000 just kind of makes sense, is most representative of sort of the average stock and its behavior. As far as like the movement, and what it looks like. So anyway, long story short, Russell has basically almost not quite all year, but if you take January out of here, basically starting around in February, it's been just chopping around in a big sideways range, and I think last week I might have drawn like a big rectangle around this area, but it's pretty easy to visualize. Anyway, so goes the Russell 2000, so goes the average random stock, in my opinion. So we'll have to keep an eye on that. The other thing I like to, real quick, is I like to look at this ARK ETF to get sort of a gauge of the, innovative stocks, the high momentum stocks, that type of thing. Sort of the new. I actually have a list. I have a list of. I don't know if I want to take a look through all these today, but I got a list of the top 10 holdings of ARK. It's Tesla, Teladoc, Roku, Coinbase, Zoom, Square, Twilio, Shopify, Spotify. So it'd be interesting to jam through and look at those. But like I said, I want to keep this show relatively short today just because, because it's the dog days of summer, not a whole lot going on in the market. And I have some things to take care of, one of which is to figure out why the live embed has changed. So anyway, you'll definitely be watching the replay of this show after I did it, so you'll know why it's so short. So we have 3 open trades here, and we'll dig right into those real quick. The funny thing is, FTAI triggered in. I had a nice sell-off, right? Basically, it's in an uptrend, and so it had this nice sell-off, and and essentially it triggered in on sort of a trend line break here, and looked like it was about to get a decent little move. It also happens to be sandwiched between the 50 and the 200. Didn't really get any forward momentum, and now it's kind of drifting back down. There was no forward momentum, so we'll have to see what happens with that. Every possibility, and quite frankly, I'm not real familiar. Fortress Transportation, I don't know if this is a trucker or ETF or what, so I'm not real familiar with this, but this is typical. Sometimes you get a trend line break and a little bit of a bounce, and then sometimes there's some retrenchment. If the stop was down at the at the very bottom, the stop happens to be at 2660 here, and so it's a couple of bad days could actually tap that, but anyway, we typically like to keep the stops under 5%. So, and then of course, sky's the limit, as you'll see on these next two. And here's the funny thing is, so here's Kroger's. Kroger's is the one. Look at this. This is absolutely incredible. So when it originally triggered in way back here, July 15th. We were talking about it that week on the show, and I drew this trend line sort of across the the primary trend line across these lows, and basically it really sort of accelerated higher, and now I'm not going to do it, but I could draw another trend line at a much steeper angle, obviously, but so that's what that's all about. Anyway, it triggered in and made a really massive move right afterwards, and this is the only one that's actually the only chart that's managed to keep all the trailing stops and all the markings along the way, right? For whatever reason, Pfizer, the next one, Pfizer, is like always been sort of a problem. I remember marking it up, when it first triggered in, marking everything up, and then, a week later, all the marks that I'd made on the chart disappeared. And and what I'm talking about is all these, the triggers, the trailing stops, all that good stuff. All that had disappeared from my Pfizer chart, and then since it's been an open trade since early June, I've redone it several times, and for some reason, this stock charts charting software, the ACP version, which I prefer, doesn't seem to like to keep the no matter what I do, eventually every time I come back to Pfizer, everything's disappeared. So it'll be interesting to see what's there because this morning I marked like just a few things on the chart because it was totally blank again, which is very odd. But anyway, you can see Kroger's here has had an amazing, sort of an amazing move since it originally triggered in back here. You know, it didn't actually, well, yeah, it's I was going to say this spike back here was a little bit unusual. This may have been the Warren Buffett spike. I remember, and I don't know about that, but I remember that at some point Warren Buffett said he was invested in Kroger's, which is, and everybody knows Kroger's, you know, big East Coast grocery store chain. So I never thought the grocery business was all that great. I mean, and I remember somewhere in the past reading, you know, how slim their margins are. Grocery store margins are minuscule. However, you know, we are in interesting times, and grocery stores are, you know, a big thing during the pandemic here. This is the one thing that's gonna pretty stable. So we'll have to see. But anyway, regardless of that, this move on Kroger yesterday really took me by surprise. I didn't actually look to see what the news was or if there is any news, but obviously, you know, it's a very similar sort of move to what we saw in this long range day and this long range day. So this stock is most definitely under some accumulation, and there was likely some news. I could look it up. I probably will, but after the show. Anyway, so we're looking pretty good here. The system trailing stop has moved up to 4250, which is just under this, you know, just a few days back. However, you'll notice that there's a parabolic stop that I believe the parabolic stop was up somewhere around here too. I don't excuse me, I don't have it marked on the chart, but you can see it in the open trades data table. And so the parabolic stop now is 43.66, which I believe would be 43.66 would be just yesterday's low was 43.60. Yeah, so it's basically just a penny under yesterday's low. So now you know in the past that well you may have seen in the past that one of the videos that's probably buried somewhere and difficult to find, although it could be in some section of the videos page. I put a few old videos when we first launched the service up on the videos page that basically kind of gave a background of how this system worked and the strategy and all that. And long story short, you probably remember us talking about on a big long range day like this, it's not a bad idea to protect the midsection of that bar, right? So theoretically, I mean, if you got a really nice gain in this, and obviously, you know, the target was way back here. The target was only 39.75, and so, but at this juncture, if you're still holding some, protecting the midsection, say 44.50, you know, would guarantee a really nice profit. Now, a lot depends on, you know, we've always added or not added discretion. We've always advocated that each user, the system is kind of designed so that each user can use their discretion on how they feel about the particular stock in the trade and how they want to, you know, scale in, scale out. There's a lot of variables, and so there's no one right way. At this point, I think that the parabolic stop is you know, just below yesterday's range is probably a really good way to just lock in any profits if it were to reverse. You'll see like back here when it had this big long range day here, it did have a subsequent pullback, but it never actually went below the low of the long range day. It just had like a little 4-day dip and then continued on. And same over here, big long range day, little bit of a dip, and both those dips did go halfway back into the range. So it's really just a matter of, preference. But using the parabolic stop at this juncture is probably the best move, unless you want to take something like this and turn it into an investment, right? Like a longer term investment, in which case, this trailing stop is probably going to continue to ratchet up relatively quickly, but it's the system trailing stop is always designed to sort of hang back far enough based on the price action so that the stock can have, a normal sort of pullback or retrenchment after an up move and not necessarily get knocked out, so that we can stay with it as long as the move continues. But this is basically a parabolic move. There's no telling how high it can go, but all I can say is that it's probably not a bad idea. You definitely want to, minimum have the stop up here, which is going to, as of the close yesterday, this was up about almost 18%. So it's basically up about 18% now. So really good trade. And if you just wanted to follow it mechanically, you just stick with the system trailing stop. And if you want to guarantee some, I mean, if it's been open for a while, so if you want to guarantee a significant gain, then what you would do is start following it up with the parabolic stop. And so we'll see how that manifests. And then, amazingly enough, okay, here's where it gets interesting. Oh, so it kept my marks from this morning. It'll be interesting to see once I close my browser what it does tomorrow. But same sort of thing on Pfizer, only this is just incredible. This parabolic move that we're seeing here. So the trigger was way, way, way back here on this day, which was the data table shows 6.9, so that would have been back there. So this is basically the trigger back here, 6.9, and of course it made a pretty decent move. I didn't redraw the target on here this morning. Basically, what I was trying to do, I put the current stop on here, which you can see at 47, and then from memory, I put those little red levels there, which would have been, basically, essentially very close to the where the trailing stop would have been all along the way here. And of course, you see that there's also a parabolic stop, a P stop in the data table at 48.70, which is going to be, let's see, what was yesterday's low? Yesterday's low was 48.71, and so it's going to be, it's kind of an optical illusion here, right? But anyway, yesterday's low, you can see up there. Whoops, you can see up there that it's 48.71, and so that's where the parabolic stop is, and that's just sort of the way it was designed. Is that, and I can't even do this with my mouse. I can't get it exact because, well, there we go. Wow. So, yeah, it's an optical illusion. 48.71 was yesterday's low, and I swear I can see a little bit of the bar poking below that. So, but that's just sort of a little anomaly, I guess, with the charting software and the pixels and all that. So, anyway, that's where the parabolic stop is, the P stop on Pfizer. The trailing stop is still sort of hanging back a few, below the low of a few days ago. And judging by today's move, another percent or so. Of course, the day is young, right? Quite frankly, this is, interestingly enough, like back over here, just last week, big long range day, and then that reversal sort of bar, which ended up being an inside day. But I would have, when you see something like that, you think that, okay, well, that's it, the move's over, right? And I believe that the parabolic stop was just below that low. And so you kind of think the move's over, and back over here too. I mean, these were both like long range days at the time, with sort of a subsequent day that looked like the run was coming to an end. But this is why we manage these open positions with relatively wide trailing stops, just because, as we all know, stocks can do crazy stuff, and they can start on a move that lasts a lot longer and goes a lot further than anyone would expect. And so this is a great example here. So as of the close last night, Pfizer was 29.6% over the trigger price. And so, based on what I'm seeing right now, so it's about a 30% move here, which is phenomenal. Over the past couple of years, typically the biggest moves that we've locked in have been, I believe, about 30%, and they're kind of few and far between, right? Because we're not trading like super super high beta stocks here, and so a 30% move on the type of stocks that you've probably seen come through the system is extraordinary. And so anyway, so far so good with Pfizer. Um, obviously in hindsight, it's a beautiful pattern, but and just absolutely incredible. And so under big accumulation here, these kind of moves though, they never last, and so you definitely want to have your stop in. And if you want to trail the stop up, basically, right under each previous day, that's not a bad idea either. That's sort of what the parabolic stop's designed to do. Once a stock like goes into parabolic mode, then we've found that the best way to stick with that, and of course, you're gonna always like give some back, because you get these long range days, and then you put a stop right under the low of that day. So you're always going to give some back when the move finally ends. But that's just the way that we've found that allows you to stick with, right? Stick with the move. And so this is a good example over here. The way that this stop moved up to just under that low, and there was probably a P stop at the time. And so, based on what I just talked about, that's your best bet. So anyway, right now there's no pending trades, and I do expect, sort of based on the behavior of the market, I expect some pending trades to start showing up here soon. They're few and far between. There's like some very strict rules that have to happen before a or before a stock will hit the pending list. And then of course, they typically start on the pending list and then take a while before they trigger in. But whenever with the market up at the highs, that's sort of a factor. So I'd kind of like to see an overall market pullback. But as we know, and the other problem is a lot of the stocks that have gone down have literally been destroyed. And so the setups just aren't there. Like the swing trades, they're not technically positive anymore. They're probably below a 200-day moving average that's going down, and everything about them. So like actual really good high probability swing trade setups are a little bit few and far between at this juncture. Could just be a function of how erratic the market tends to be this time of year, but we'll have to see. So anyway, thanks for tuning in, and I will post the replay of the show here in a minute, and hopefully by next week I'll be able to get the live embed working. If not, I will do the same thing I did today. I will just record the show live and then post the replay. So see you guys next week. Thanks.